let's talk about the secondary markets, mainly the bond markets and what's happening in the secondary markets. We're seeing it weaker today. Of course, despite tighter rates at yesterday's auction. Why are we seeing this, Steve?
Thank you, Uche. I think everything boils down to the fact that the interest actually slowed down in the secondary market today after we've seen the auction printed a bit stronger than expected on the 7 years under the 10 years. That's the June 2019 and the January 22 yesterday, which traded at 12.49 and 12.01 respectively. Today, I think the secondary market reactions have been as a sort of most portfolio investors have been holding this instrument for some time and take profit, trying to take profit at this present level. Then at the same time, being a dollar holiday today, we're seeing a slowdown in terms of offshore interest coming through in the secondary market. So that's actually accounted for the bonds trading weaker at the secondary market today.
Right. What about the T-bill auction we had yesterday, Steve? I mean, looking at the primary market auction, we saw it close at new lows. I mean, how did the markets react to that today?
For bills, I think we're still seeing a lot of interest coming from across all those maturities from 91 days to 1 year. Mostly coming from both locals and offshore investors too. The 91 days printed at 12.4 yesterday. 182 day printed at 12.45, while the 1 year printed at 12.5 discount rate. And the secondary market, we've not seen so much difference from the levels that those bills are actually trading. That's on the back of the fact that we're seeing some demand or interest actually coming from PFAs and local players, mostly banks and offshore interest too.
Certainly, Steve, it seems like the MPC decision had no impact whatsoever on the markets. I don't know, what is your take?
The MPC decision has actually been priced into the market before the announcement actually came. It was widely expected that MPC were going to retain the MPR at 12% or the asymmetric corridors to remain constant. So that being said, if you look at what the reaction has been in the secondary market after the MPC communique, you're seeing that all these expectations have been priced into what the market is actually expecting in terms of yields across all those maturities. The other alternative that people are actually looking at was the auction on those instruments. But after being cleared at 12.49 and 12.01, you don't expect to see much reaction again when we've seen some reaction slow down, some interest slow down from both offshore players and even a few locals that have been investing in this instrument from time.
Well, Steve, let's turn our attention to the currency, taking a look at how the Naira has been performing, and certainly it's been strengthening to the dollar on the interbank market. I mean, we saw it close at 157.45. What's your take on the direction the currency has been going?
We've seen the currency traded at the beginning of the week at the high of 158.40.50, and we've seen it currently trading around 157.4555 in the secondary market. That's on the back of the inflow seen from the offshore players who are investing in securities and equities, and as a result, or some other flows too coming from oil company sales. So I think going forward, we're going to see some support around this level, because if you look at what the CBN effective level is around 157.31, and having seen the market flatten out around 157.4555, I think going forward we're going to see some kind of support around this level, and with the possibility of slight appreciation if you see more flows coming through in that direction.
And Steve, certainly, what's your take on how we've seen the CBN sort of intervening at the WDAS window? I mean, we saw them increasing the amount they're offering. This week they offered about $400 million.
Well, I think the cycle of the offering from the CBN windows has actually been very constant for some time. We've been seeing them come in with a cycle of 200 million at the WDAS window. Monday, 200 million were offered and sold. And same thing for Wednesday, although we saw slight depreciation of about 1 copper from 157.330 to 157.31 effective CBN rate. But that being said, I think we're still going to see supply coming through from CBN windows around those cycle of offers.
Right, and Steve, I mean, I'd love to get your outlook then for both our secondary markets, both T-bill and fixed income markets, as we go into a new week. Of course, tomorrow, tomorrow is Friday.
I think for secondary market in fixed income and bills, activity is going to be on the low for some time, probably between now and next week. But having said that, with the direction of interest rates still trending low, and with the expectation that inflation is still going to start to trend lower going forward into the last quarter of this year, into the first half of next year. The possibility is there that we're still going to see some demand, though actually might come in trickles right now. And compare and I consider the fact that the JPI index weighting, which actually been increased, will actually kick effect from next month. The possibility is there that we're going to see more interest coming through into this market.